Happy July. It's Deontay here. So happy to be coming to you again. Just wanted to even let you know, even though it's mid-July, I do see the email says Happy 4th of July. I just want to tell you that the reason why I get them out mid-month is because I need to wait on my board to upload the market report so I can get them to you, which doesn't happen until like between the 10th and looks like the 15th is when they're getting it out today. So thus I will get this out to you today. So that's why the email says 4th of July and you're getting it from the so just please forgive that. So anyway, but I do like to get the data to you and then the email is already ready. But yeah, so I hope you had a good 4th with your family or just rested from work like I did and was very glad for that. So just wanting to talk about today. So I've gotten a request from one of my top referrers over the years to Abigail to actually show how to pay off your mortgage early. She asked questions about that, and I said, you know what? I was thinking of making a video. Let's do that. So what I like to do is that, and then this month in the newsletter, you'll see that you can find some maintenance tips for your home, ways to clean, little hidden areas you might not have thought of, and then also how to throw a great barbecue for any time, not just for the 4th. So I hope you enjoy the newsletter. And if anyone else has tips they would like me to research and do videos on, let me know and I can look into that for you. So, all right, let's get started for today. I'm going to share my screen and we're going to look at a mortgage and how to pay a mortgage off early. All right. All right. So right now, I'm gonna just do sort of like a little bit of a just an example. So I figure a number like 350,000 will be great. So let's do that. 350,000 for the home, 3.5% down, 30-year loan. And let's say you listened to me and went to a seller that gave you a 4.99% rate. That'd be amazing, right? And and then let's say taxes are 2.4%, homeowners insurance. The newer the home, the lower your homeowners insurance is typically because there's less risk involved. And so you know how insurance is all about risk, and so less uh homeowners insurance pay. And then PMI, I'm putting at 0.55%. I've seen it there. It could be as high as maybe 0.8 or 1%, but I think because of the tightness with the market, I think lenders are saying we have to come down to make the payments work for the buyers. So I've been seeing the lenders actually do what they have to do and come down on PMI, even it seems, to make it work for buyers to get into their first home in particular. So HOA fees, putting that at 600. So if you were to do that, 350, your monthly pay is not 1811. When we put in all the other factors like taxes, insurance, PMI, HOA, your payment would end up being, let me refresh it, about 2804. Okay, so that's actually still pretty good, less than 1%, closer to maybe 0.8% of that, something like that. So I think that's pretty good. Now, why am I showing you this? I would like to show you the good news. Okay, so have anyone ever looked at how much you'd pay if you went ahead and just did all 1 month of payments per month over 30 years? That for a home that's 350, you would spend 651 in total payments with interest because your interest is 314, almost as much as your initial mortgage, your principal. So we want to avoid that. How can we do so? Let me show you how. It's about compound interest and how it works. In this case, you're working it in your favor. Okay, so let's pay off a little sooner. So the monthly payment's about 2,800. I'll round to 2,800 for math purposes. Let's say you get a bonus every year. You're the kind of person gets a bonus. Okay, so let's put in 2,800 around Christmas time or whenever. Let's say someone gives you birthday money, you have a rich uncle, something like that. And you make an extra yearly amount of 2,800. Let's calculate that, how much you'd save. Oh my goodness, did you see this? 30 years went down to 23 years and 2 months to pay off your mortgage just for making one extra payment a year. You're telling me a 30-year mortgage got cut by like 25% because of making one extra payment? So 1/12 extra per year will knock off 25%. That's the way interest works, my dears and sirs. Okay. So you would save 82,000 interest over that time. That's amazing. Okay. And that's not 2,800 every month. That's just 2,800 for the year. So that'd be about 250 or so per month extra. Who can find that? You can find that with cutting eating out. You can find that with getting a doing better shopping on your car, not spending so much on getting a luxury so much, but getting a car that's more affordable, maybe a few years old, Honda or Toyotas, I recommend. So something like that. Do your research, but a little strategy and intelligence and smart moves can save you 82,000 over the life of your loan, which has just been shortened, by the way. So now let's go to making two extra payments a year. All right. So what would that do? Now you're saving 129,000 over the course of now it's become 19 years, okay? Off of your loan. So your monthly payment's still the same. You have it at 30, but you're putting extra money on when you can and you're making that interest work in your favor. So now you've knocked off 11 years about off your mortgage, okay? And then now we'll see, let's go ahead on to three extra payments. What would that do? Some people have it like that. All right. You might work on commission, like myself, and you could just pay your bills and then start putting money on debt. So with three extra payments, you can actually pay off your mortgage in about half the time. So about 16 years and a month, you will have paid off the mortgage and saved over 160,000 in interest. What could you do? How much could you fund your children's college education? How much could you save up for maybe helping them with their down payment on their home by just being smarter and putting more money on your mortgage? That way, you have more going towards more equity reserved up because you're not spending so much on the interest. So, if you decide to do this, let your bank know when you make extra payments, you want to put that amount on the principal. So call them, email them, whatever you have to do, and make sure you find out their strategy of how you can make sure to allocate that properly. That way, you're saving over $150,000 for your family. So, blessings to you and take care. And if you have any questions about this, let me know. I'm very excited about helping my clients to save money. And feel free to pass this on to your friends because friends don't let friends pay high interest rates, and friends don't let friends be in the dark on how to save money. So, blessings to you and take care. And I'll see you next month. Bye.